Good morning, good evening, good afternoon to wherever you are in the world. Welcome back to another coffee hour. We have some stuff to cover today. All right, we got some stuff to cover today. So we have Robinhood that came out with their chain, Robinhood chain. So that we're going to be covering that. We're going to be covering a little bit about a couple new ETFs that are in the pipeline to get dropped. I actually was kind of surprised about one of them. These are coming strictly out of Roundhill. So if you're, a fan of Roundhill, now I'm not just talking about the weekly pays or WPay or, high yield products, but I am talking about simple, thematic or sector-based ETF. So they got some coming out. So we'll cover that. We'll talk about sector rotation. We're going to be talking about some broader macro stuff. So the payroll jobs just came out. So that was a big deal. So we do have some things to talk about today, and we're going to get right into it. But as always, I do appreciate you guys joining me this day. Let's see, what's today? February 11th, your guys' time. I'm living in the future, February 12th. So I do appreciate you guys joining me in for this stream. All right, guys, let's get into it. I got to fix some things because I don't know why my stuff is messed up here. So there we go. All right. We also had red. Why is that not changed? There we go. I got to have the red, guys. Like, it bothers me. All right. I think we got Skeptic in the chat. Hey, welcome, Skeptic. Always appreciate you joining. All right. So let's add this to the stage. All right. Let's get into it, guys. So first up, as always, we got the S&P 500. We are actually down not a lot, actually. This pretty much traded flat for the day. I did see, the market open. It did look like we were doing okay. And then it just had kind of a sell-off. Probably towards the end. As a matter of fact, let's bring up FinViz and then see where the damage lies. We're going to cover sector rotation here in just a moment because that is important. That is pretty much showing us where all the money is going to. So here is the heat map for the S&P 500. Again, it looks like the major hyperscalers are kind of just selling off. We have Microsoft, Oracle, Amazon in the mix, Google getting all sold off, right? We have Palantir getting sold off there. But it looks like it was a pretty decent day. Doesn't look too bad. I mean, yeah, financial services had kind of a sell-off. Let's see. Yeah, we have software. Of course, software has been taking a hit. Look at all those names. Look at all those names just getting absolutely clobbered. All right. So yeah, it's a rotation, guys. It's a rotation. Everyone is getting out of software. So we have the semiconductors doing well. All right. They're the market leaders. They're the ones leading. And like, we were talking about earlier, you're going to want to, think about the theme for this year, scarcity versus abundance, right? Software is definitely very abundant, but it doesn't mean it's dead. Okay. Don't get that twisted either. It doesn't mean it's gone or it's going away. So anyways, just wanted to share that little piece because I think it's important we look at the heat map so we could see kind of visually what's going on with the market. We have gold actually up 1.13% today, so not bad. Again, still the best performing asset year to date. We have Bitcoin kind of trending down, all right? Not doing really hot today. It fell below 70, all right? It fell below 70,000. I saw it hit about 66,000. And I was really hoping that it was going to go lower, to be perfectly honest. I still think we're going to be heading lower, much lower. I think we're going to probably be heading towards the $55,000, $58,000 range. Again, some analysts or pundits are calling for about 37,000 Bitcoin. And the reason is because if you look at the all-time highs, from last all-time high back in October, let's just call it 125, right? Let's just call it 125. And you take away about 80 to 90%, right, which would be typical for a drawdown, for Bitcoin, then you're going to end up in those ranges, right? Those really, really severe ranges, So again, nothing to panic about. It hasn't happened. All right. It doesn't mean, start the fear, doom and gloom, scenario and narrative. But it just means that it's pretty normal for crypto. I mean, Bitcoin has had some amazing drawdowns. Okay. All about, 80 to 90%. But I mean, it's usually preceded with, some really face ripping highs. All right. We have 1,000% here, right? Draw down there. And then another, 100% or close to 100%. We have 80% there. We have another drawdown. If my mouse will cooperate, we had another drawdown, 75%. Okay. 75% to its lows. And then just look at that craziness. 600% up. All right. Over the span of 3 years. So again, guys, just hang in there. Don't hodl. All right. Especially if you're a believer in Bitcoin, you got to have conviction for this stuff. All right, let's move into kind of the new ETFs that will be coming from Roundhill. All right, I don't really cover that stuff all that much. Actually, before I do, sorry, I gotta upload or front load this. All right, so again, for any new viewers, this is the State Street basically sector rotation overview. You guys can see which sectors are doing well, right? You guys can see which ones are doing well year to date, over the last month, 6 months, year to date, over the last 5 days, and over the last day. You guys can see that over the last 5 days, a lot. Wow, look at that. Real estate is actually coming back. Real estate, right? I mentioned this to Comic Book, one of the viewers. He asked what was my most contrarian bet, and I said real estate because I do believe it. It's been in a bear market, an absolute bear market the last couple of years. With the potential for interest rates coming down, that is bullish, but it doesn't mean really a whole lot either, because you have to get the 10-year treasury down. The 10-year treasury is what influences commercial real estate debt, right? And I haven't looked at it in a long time. Last time I looked at it last year, there was about $1 trillion and $1.2 trillion worth of commercial real estate debt due. Okay. And the banks have been doing this thing called extend and pretend, where they'll just keep extending the loan, but they could only do that so much or so long before they start, running into problems. And they're not trying to hold on to buildings either, right? These banks, these mortgage companies, they don't want to hold on to banks or hold on to buildings. They want to get rid of buildings as much as anyone else. They don't want that on the balance sheet. They're not real estate investment, people. So whenever a building forecloses, the bank will get it, and then they'll sell it at a fire sale, right? But it wipes out all the investors in that real estate. But again, real estate looks like it's having a rotation. All right. Real assets. That is the theme. That's the theme for this year, is real assets. Gold. You have real estate, you have infrastructure, power infrastructure, you have commodities. These are the assets that should play out very well this year. Okay. So we have materials, energy also in the top 3. Okay. So really interesting to see that. Energy again, right? You have energy again taking the lead. Again, we're talking about the whole AI thesis, data center build out, all that stuff. So you need power to power that. So I just wanted to cover that because, again, the real estate stuff was kind of surprising there. All right, let's go. All right, so this is coming out from Roundhill in the not too distant future. Probably I just saw this. All right, I saw it mentioned before, but they had this in the prospectus for XPay from way back. So they're coming out with this now. So XPay is a managed 20 distribution or target 20 managed distribution. So, 20% yield, whereas TPay is going to be 10%. It's probably going to follow the same exact playbook that XPay follows. Why they're doing this is kind of beyond me. I mean, why would, they do that? I think it has to do with, obviously, NAV erosion. They're paying out a 20% distribution if the S&P 500 was to have a bad year, prolonged downtrend. That 20% managed distribution starts to really play on that NAV, right? Really starts to put on some pressure. That's the only reason why I would think of something like a TPay, where, they'll have a 10 and 20. Because of course, just human nature, human greed. Why wouldn't you go for the 20, right? So I'm actually interested to see why they're coming out with with a target 10 managed distribution. I really think it has to do with a down market for the S&P 500, and it's better to continuously lose a 10% on an S&P 500 that's not returning that versus the 20%, right? At least those are my thoughts. All right, so we also have Padre. Do you put out alerts on X when you start streaming? I'm only getting them from YouTube just in case you're not reaching your audience. I don't really put out alerts for X. It's really what happens is when I start streaming, it just, like, I'll show you real quick. We'll just take a little side quest here because I'm all about the side quests. Yeah, so when I do it right here on X, it just shows up, right? Like, I can't schedule it or anything else. Look at this anime. Bro, I've been seeing so many crazy AI videos like coming out. Like, it's wild. They have They have one of Tom Lee and Mr. Beast dancing, right, as they're about to pump up Beast Industries, and there's a whole bunch of other crap. Like I saw one of Michael Saylor and Tom Lee dancing as, you know, Bitcoin was starting to climb back up and Ethereum was climbing back up. Man, it's funny. Sergio asks, what is my X Twitter handle? It's my name. It's the same as my YouTube channel, same exact as my YouTube channel. So I do appreciate it. Let's see. Isn't T-Pay the name of a rapper? It's T-Pain, right? This is T-Pay. All right. So another ETF that's coming out. So those are just my thoughts on T-Pay in the future, right? Instead of doing videos, doing and diving into the prospectus and all that other nonsense, I'm just not going to do that, guys. This is just a very high level overview of what T-Pay is. And again, if you're looking for a managed 10 distribution, right, a 10% yield that's done way in advance, then maybe T-Pay might make sense for you, right? Instead of going for a 20%er like, XPay, because again, XPay, that 20% could play against you, could add additional pressure to the ETF, to the ETF, because if the S&P 500 is not moving up and it's still paying out a 20% distribution, right? That is obviously not good. So you have to take that into consideration. So I that's the only reason why I would think that Roundhill is coming out with a 10% version of this. All right, cool. Speaking of that, they're also coming out with another one, right? And this is a thematic ETF. And this one might be right up some people's alleys, right? They're coming out with Mars, which is the Roundhill Space and Technology ETF. All right, we don't know what the holdings are yet. We have no idea what it's going to do. If you're really looking, because the whole SpaceX thing, right? The whole SpaceX XAI thing, data centers in space, et cetera, blah, blah, blah. There's a whole story for space exploration. I have not even really dug into it. I haven't really touched it at all. It's just because I'm not there yet, right? I'm not bullish on space, but you have Rocket Lab as one of the companies. You have, what was it? ATST, right? I think is what the ticker is. Not ASST, that's Strive. That's a treasury company. But there's ATST, which is low Earth orbiting satellites, if I'm not mistaken. And you also have Amazon, right? Of course, you have Amazon. You're going to have the future SpaceX IPO. I'm sure that'll be, in this as well, right? You have all these companies that are trying to get to space, trying to put more satellites in space, et cetera. So I think that is probably what this ETF is going to be based on. Personally, I don't know really, because we don't have that much information, right? We could take a look at the prospectus, but it's not going to really tell us a whole lot. It's not going to tell us what companies it's going to hold specifically, right? So we got to wait until the ETF actually comes out so we can see the holdings and then kind of go from there. Why not? Let's take a quick look. I'm actually curious now that I'm talking out loud. All right, so I'm just curious. Let's take a quick look. So this just came out. Let's see. Now you're going to see a bunch of, well, maybe you won't see any videos on this one or T-Pay. Let's see. The fund actively, blah, blah, blah. Okay, here we go. By investing in equities for robo-taxis, autonomous, you guys can't see that. Hold on. There we go. Boom. There we go. Come on, Eugen. Think of the audience. All right, so Mars is going to be investing in robo-taxi, autonomous vehicles, and technology companies. Robo-taxis are autonomous vehicles, AVs, that provide mobility as a service. I've never heard this term. This is new to me. Mobility as a service. The fund will generally seek to invest in equity securities of robo-taxi, autonomous vehicles, and technology companies. All right, the fund's advisor, Roundhill Financial, blah, 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 blah. Development and manufacturing of robo-taxis or AV systems, including hardware, high precision sensors, radars, cameras, compute accelerators, artificial intelligence, because of course, infrastructure and other system components. Now, on the software side, they're going to look for full stack autonomous driving technology, advanced driver assistance systems or ADAS, mapping software, neural networks, or vehicle operating systems. All right, so they're looking for companies that do commercial usage, ride hailing. Could you imagine Uber in space? Mass applications, logistics, shared vehicle fleet deployments, operation of services or enablement of infrastructure critical to robotaxi or AV deployments, AI trading platforms, simulation environments, fleet logistics, cloud computing, the development manufacture. All right, so they got a bunch of stuff in here. Of course, they're gonna have semiconductors. You're gonna have to have that. So I won't be surprised if NVIDIA is probably looped up in this. AI services, automobiles. Yep. Imagine forgetting to pay your mobility as a service and they shut your wheelchair off. you forgot to pay the subscription, right? And then they shut it off. Isn't that what happened to like a Tesla or something? Like Tesla just shut down on the highway because the software like stopped working. Insane, absolutely insane. So we have from Numex saying he'll pass. I don't blame you, bro. I really don't blame you. This is, I don't know, man. Like for me, I'm not, like I said, I'm not super bullish on like the space frontier. This is probably going to be a roll up of a lot of those high beta names, you know, those momentum hype stocks, you know, like Rocket Lab, like a Rocket Lab. They'll probably throw in a couple robotics companies in here. I don't know. I just, they'll have Amazon in there because, of course, right? Amazon and probably Tesla will be in there for some reason. All right. Yeah. Same thing. I probably will also pass on this. So for just any viewers that are just catching, and we're just talking about Mars, the Roundhill Space and Technology ETF. All right. So you guys, again, if you're interested in something like that, it is due to drop probably in the next, 60, 90 days. So when that happens, we'll be able to see what it's actually holding. All right. So we got some big news for Robinhood. Okay. Robinhood announced on chain or Robinhood chain. Okay. This is a huge, huge deal. We've been talking about it on this channel for a very long time about the tokenization piece that Robinhood has been kind of pioneering, or Robinhood has been chasing, right? Where they want to move everything onto the blockchain. And, this is going to do, they did this in Europe, right? They allowed tokenized trading where, people can buy tokens that are related to like private companies or stocks, right? So they allowed that they have that in the European market. So now they're doing this more broadly, right? They're allowing other companies to come in and basically tokenize whatever they want, right? And this is just a couple more steps towards 24/7 trading of not just crypto, but tokenized, again, everything. All right. So this is a big, big step for Robinhood. Again, Robinhood is not just your typical brokerage account, right? That is what separates them from everybody else. It's not just, trading. It's not just you doing options. It's not just, whatever a brokerage does, right? They're doing so much more. They're doing mortgages now. They just released banking, as a matter of fact. So banking is there. They have, the credit card. Of course, I've been on the gold wait list for like, I don't know, a year now. But they're doing a lot more. So, and they also have, tax prep and estate planning as well, which is rolled up in that banking if you bring in, a certain amount of money. So it's really like Robinhood is really growing, and it's growing fast, and they're bringing in all these new all these new avenues, right? They also introduced prediction markets last year, which was a big step. So again, I am super bullish on Robinhood. I like the direction that they're going in, and I think this is going to be a big deal going forward, right? So, they give you kind of the pitch here. They don't really give you a whole lot of information. So what I did was just quickly look it up, Robinhood chain. So I'm just going to briefly explain this, right? So Robinhood chain is a permissionless Ethereum-based, keyword Ethereum, layer 2 blockchain built on our Arbitrum technology, designed specifically for the low cost, 24/7 and compliant trading of tokenized real world assets and digital assets. All right. Some of the key features of chain infrastructure is built on Arbitrum, Orbit and Ethereum for speed, efficiency, and security. The purpose primarily designed for tokenization of assets rather than just scaling. It allows for self-custody via Robinhood Wallet and access to decentralized finance tools, which is really, really cool. Like I could almost imagine, again, real estate moving on to these blockchains. Imagine if you're a real estate investor and you need to raise money for a deal, right? Or if you and 10 other investors want to go in, you could tokenize that real estate. You could tokenize that deal. And then, investors can put in via the tokens, right? There's no paperwork or very little paperwork on the investor side. If you guys have ever purchased a property, it's like a 30-day, all this paperwork has to come through. You have to sign off on a bunch of documents. If you're investing in real estate, even as a partner, there's legal documents, there's private placement memorandums, there's just a whole bunch of stuff you have to go through, right? Whereas the tokenization stuff, it's really quick. You just buy the token, you hold the token, you put it in your wallet. So there is a company out there called Realty that does this already. I haven't looked at them in quite some time, but they've already done this for a lot of their real estate. So it can be done. It would be really cool once this starts to really branch out. Imagine investing in just private companies. I would definitely think that would be really, really cool. As a matter of fact, some of my friends were reaching back to me and they're saying that they just got their accredited investor verification letter. And, I'm telling them, man, look at OpenAI, look at Anthropic, look at, Anduril. I would not let that go to waste, right? If you got it, use it. If you got the cash, use it because you're getting in some ground deals. Of course, when I had it, I had no idea of these companies, right? I didn't really know OpenAI. I didn't really know Anthropic or Anduril. So we'll see, if they take that. But anyways, currently in public test, and I'm sorry, this is like super bright. I should probably tone it down. There we go. Currently in public testnet, providing a sandbox for developers to experiment with tokenized equities and other assets with a future mainnet rolled out planned. All right. So that was a big deal. So we actually have Vlad talking about this. All right. So let's listen in. Oh my God, no sound again? Dang, what kind of show am I running here? Okay, hold on, guys. I'm sorry about that. Let me remove this. Oh my goodness. Okay, let's see. We gotta, stop the screen. We gotta add it. Dang, I am so sorry, guys. StreamYard. They don't just automatically let you have system audio. You have to keep enabling it. It's so annoying. Okay, there we go. Let's go back. All right, let's go.
Sharp declines in Bitcoin and other cryptocurrencies. I'm curious, what kind of internal assumptions are you making about crypto trading and crypto price action this quarter and the rest of this year?
Yeah, I think we try to really stay focused on the long term as we think about the business. Robinhood is the beneficiary of so many tailwinds that are materializing as we speak. The 100 trillion wealth transfer from older generations to younger, an AI super cycle that we see playing out in higher productivity. So many announced private companies, including space exploration companies and frontier AI labs that are expected to be entering the public markets. And I think all of these are converging to make it an environment where we expect more and more people to be investing in the equity markets. And the quarter, now that we're a diversified business, I think there's always some sector that might be temporarily under pressure. In this case, it's been crypto, but we're still tremendously bullish on crypto as an industry and as a fundamental technology. In fact, just after earnings, we announced the testnet of Robinhood chain, which we intend to be the world's #1 chain for trading real world assets, for the tokenization of real world assets. And so we're pushing ahead with tokenization, and we see a world where crypto and TradFi increasingly converge, and we think we could be right at the center of that.
Well, Vlad, you mentioned the concept of super cycles. And speaking of super cycles, you said on your earnings call yesterday that we're just at the beginning of a prediction market super cycle. And certainly you wouldn't be alone in that view. But when you think about Robinhood customers on prediction markets, do you have any sense of what kind of returns that they're seeing? There has been some research out there and some concerns about big losses coming from prediction markets.
I think these things tend to be volatile. I mean, 1 month you'll see returns, the next month not. I think what we're building towards is an integrated financial super app where you'll be able to trade and invest in and hold any asset, as well as do your banking with us and your spending through the Robinhood credit card. And I think we're unique in our category because most of the prediction markets platforms are kind of single purpose. You can only trade prediction markets. But what we've been seeing increasing success with is bringing customers in with prediction markets, because prediction markets attract a new type of customer. They allow you to trade pretty much anything. And then once they're in the door, we cross-sell them lots of our other products and build a deeper relationship. And you look at retirement, for instance, retirement is at 26.5 billion assets under custody. We've given out over $500 million in matches, and the assets under custody is up over 100% year over year, more than double. So I think looking at each of these things in isolation is not how we look at it. We look at it as the overall relationship and how can we make sure we are helping customers with the totality of their financial needs, from their paycheck direct deposit to their long-term savings to their retirement savings, and of course to the discretionary trading activities like futures, options, and increasingly prediction markets.
So Vlad, do you plan to offer, or are you looking to offer margin for prediction markets?
I think that's subject to the exchanges filing for it. I think that margin can be useful for active traders, and if there's something that there's clarity on and we see the demand, I think we would explore it.
And I'm curious about, the recent majority take that you took in LedgerX with Susquehanna. I know that currently you work with Kalshi, of course, when it comes to prediction markets. But, Bloomberg Intelligence has said that more than half of Kalshi's business in recent months has come from Robinhood. How might your relationship with Kalshi change should you actually start to launch what you've invested in?
I think Robinhood has many businesses. Of course, we have our brokerage business, but we do also have exchange businesses. On the crypto side, we acquired Bitstamp, and so now we have a fully featured global crypto exchange. You mentioned the joint venture with SIG on Rothera, our new prediction markets and derivatives venue. The way we think about it is when we offer our products to customers as a broker, we want to give the customers the best selection, the best pricing, and the best execution quality among all of the exchanges. So take crypto, for instance. We, of course, route to Bitstamp, and Bitstamp does quite well, but we don't exclusively route to Bitstamp. We route to whoever gives our customers the best pricing. Same with equities. And so I think we should expect the Rothera acquisition to certainly take a larger portion of our volume, but we'd still continue to route. And we see a world where the prediction markets exchange space is more and more a multipolar world where the exchanges will compete to offer the lowest pricing and the best deals to brokers such as ourselves.
All right, there we go, guys. I mean, I'm still really bullish on Robinhood. I really, like I said, I think I mean he put it better. He put it the best, right? This is going to be the finance super app, and it's starting to show. It's starting to show that way. Like you can go to Robinhood for almost anything at this point. Now that they have banking and now that they have mortgages, You can have your investments there. You can open up retirement accounts. You can open up a credit card. Like there's just so much you can do with Robinhood now, right? Versus way back in the day. Well, I say way back in the day, I mean like, I got into Robinhood around 2020. It was just a simple brokerage with a lot of neon lights, right? A lot of gamification added to it. But now, it's turning into something special. I think it's turning into something much, much different. So, it won't be, and they also have the robo advisor, right? They also have the robo advisor for more passive younger investors who don't want to, fiddle around with stuff. They don't want to do their own research, right? I think that's also underscored or quite a bit, not mentioned a whole lot. That Robinhood also has, a robo advising service, right? So it'll help them build a portfolio based on a questionnaire that they submit. So again, I think that is super cool. So that is, again, for me, what makes the story for Robinhood a lot or really, really interesting. Yeah, you can. You can't speak with them on the phone, of course, but you can speak with them in chat. And they also have AI agents that help answer a lot of the basic questions. So I know Fidelity, like I was with Fidelity, and you can, call Fidelity, you'll get a live rep. I used to believe like that was the best thing. But for most, I'm probably going to paint this with a broad stroke here or a broad brush. But I think most investors don't need someone on the phone. Personally, like you're looking at the new generation of people that are entering the stock market, younger, 18, they're already technologically focused, or they already have, they're already used to chatting on their phones, right? WhatsApp, you have Facebook Messenger, IG, TikTok, like they're already used to talking to people through an app. So the whole thing with phone calls, in my opinion, it's more so for the older people. Like, I know that was one of the biggest arguments that people would use, against something like Robinhood, is that, you don't get to call in. There's no phone number you can use. But again, it's not geared towards those older, the older generation, type of investors, at least in my opinion. All right. That's just my opinion. And I think it holds true, because every time I've used Robinhood, I didn't feel the need to call them. Like anything I do with any finance, it doesn't matter if it's finance, it could be a health insurance claim, it could be whatever. I'm usually typing out an email or typing in the app, chatting with a support rep. Having been in IT long enough, you never spoke with, Dell reps over the phone, almost never. You would usually speak with them over chat, right? So I don't know, maybe it's just the way I came up and I've always been used to that, but to each their own. Let's see. Oh yeah. Speaking of this, definitely can't beat that margin rate and maintenance as well. That is true. 100%. That is true. Coming from M1 Finance, again, M1 Finance couldn't call anybody, but I never felt the need to call anybody. But yeah, M1 Finance, their margin rates were a little higher than Robinhood, which made Robinhood a little more, a little more user friendly. So I was happy to move off M1 Finance into Robinhood, but also the stock selection. You also had better stock selection compared to M1 Finance. But to the point on margin, that if you guys heard that, right? You guys heard that. That's
come from Robinhood.
For the prediction markets, they're thinking about adding margin for prediction markets. I don't know if you can do it already using Robinhood. I never tried, but that to me is pretty crazy. You're just really incentivizing degeneracy. Like you really want people to blow up their accounts. That is just that's just getting crazy. All right, let's move on, guys. All right. So we have from Jimmy Priz, loving the daily updates, bullish on Robinhood. Let's go. Hey, I appreciate that. I appreciate the comment. All right. So we have Dan Ives. We have not heard from Dan Ives in a long time. At least I have not really seen him in anything. So I seen him coming up, talking about AI, of course, because that's his whole kind of like background. He's from Wedbush Securities. He also runs the Ives ETF, IVES. So you can see and check him out there. All right. So let's listen in what he's talking about. And they're talking about the sell-off for tech, like what is happening, and we'll just get his thoughts.
Apocalypse is, did you coin that term, Danny?
I wish I did. I did not coin it.
Okay, so I hear it from Danny all the time, but I guess we've seen, little press releases from Anthropic drive hundreds of billions of dollars in sell-offs. What do you make of that?
There's a better chance of me beating Ilya in figure skating than ultimately Anthropic taking out the software index. I mean, to some extent, look, the hearts and lungs of AI are going to be the use cases. So when you look at ServiceNow, Salesforce, they're going to play instrumental roles in the AI revolution. I mean, I can make an argument like a ServiceNow will be incrementally bigger in the next 2 or 3 years than they are today because of AI. So I just think there's a view. It's a knee-jerk. Look, on the edges, is it going to disrupt? Yeah. But I think right now, this is the Armageddon-like trade, the way software is selling off. And in our opinion, like in my career, going back to the late 90s, like it is the most head-scratching structural sell-off relative to what I believe is going to be the opposite as it plays out that I've ever seen.
I mean, that not really head-scratching, because I think if I was running a big company and I had access to amazing AI, I would say, listen, chatbot, look at my CRM software and make a better copy of it, so I don't have to pay for it every month.
Look, and that's one, in theory, okay, from a high level, that makes sense. But the reality is, let's take a Salesforce, the hundreds of thousands of customers they have. You're talking about decades of data, how instrumental they are to come. A lot of times, if you're an outside vendor to get in, just based on security and infrastructure and everything, it takes 2 years to even get a demo. So I think there's a view, is it going to be disruptive? Yeah. But I also think in my opinion, it's about the ripple effect. For every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across software infrastructure. That's why my view is Microsoft, Oracle, you look at Nebius, you look at some of the infrastructure players. I think what we essentially are going through what I'll view as almost like a DeepSeek type moment in tech. I view it as more of the golden buying opportunity given the CapEx, given the spending. I feel more convinced about the thesis today than I did before earnings.
There has been this other argument about spending, but specifically from corporate clients who are now just spending more on AI. That's what they're focusing in on. Everyone's trying to grapple and figure out how they make their company more proficient, more better, kill costs. And that comes at the sake of spending on enterprise software. Do you think that's fair?
No, I think that is fair. And that's why in the near term, it's a headwind relative to 67% of IT budgets right now have to have some sort of AI focus. But my whole point is that as the use cases play out, and we've seen with Palantir front and center is really the one that's almost been the poster child. I think you'll see with Mongo, Snowflake, and others, they will play huge roles in the build out, because I don't believe the AI revolution will not get to the heights that we believe it will without software, without infrastructure, without Microsoft, without Oracle. And that's why, I think some of this nerves here is, I think it's misguided relative to when we look at this year. This is going to be viewed as more the opportunity to own some of these winners rather than the time there was a structural sort of short.
Dude, my phone is blowing up because of your outfit. Viewers love it.
Well,
absolutely love it.
Bro, every time I see Dan Ives, this dude is so flamboyant. He's always in something super colorful. I'm not going to lie. This blazer is fire. This is pretty damn cool. But anyway, this dude is always in some really colorful outfit.
And I actually thought I thought we were going to match, but I guess I never got.
I wish.
He came in wearing something similar.
I'm on board.
All right, let's move on from that. But yeah, that's Dan Ives, kind of opinion on the whole AI trade. You're still going to need all of these companies. You're going to still need all the software. We went back to FinViz. You guys can see a lot of software selling off, right? Some of the big hyperscalers. If we look here, right at software applications, you guys see not looking too hot, right? Not looking too hot for the day. And it's just, getting destroyed, right? But you need software. You need software. Software is not going anywhere. They're calling it SaaSpocalypse, right? Software has been the main driver over the last, definitely over the last decade for sure. I mean, you have Microsoft that's just been powering and going up and up and up, right? And I'm not just talking about their stock price. I mean, the software that they're producing. They have the Microsoft Windows, and they had the, it started off as what was it? the Microsoft productivity pack, and then they moved into like O365, which is your Office suite, your Outlook, Word, etc. Then they moved to a subscription model. You have Amazon, right? AWS, huge, right? You have Google. I mean, you have Google Gmail, you have G apps, you have Google Docs, you have presentation, you have Google Meet, you have Google tons of stuff, and they also have Gemini, right? For software, application, this is going to be more so for like the apps on your phone or the software that these commercial companies use, right? Like ServiceNow is a big ticketing system that a lot of companies are starting to adopt for their ticketing. So whenever you call into a company to submit an issue, or maybe it's your local IT help desk, the U.S. government is moving towards ServiceNow. Right. I was part of that implementation, before I ended up departing my W-2. So I was a part of that implementation. So I got to see it firsthand, how powerful ServiceNow is. Right. So again, it's not going anywhere. That was his case. For anyone who is interested, because I think we never actually looked at his ETF. And of course, it's super colorful. Right. Hold on a second. I got to see this one. Missed the days when you could pirate software. Man, the Pirate Bay, good old days, right? They don't have those. Well, I mean, it's still around, but yeah, everything now is is subscription based. But anyways, this is the IVES ETF. Okay, we never really covered this, but yeah, this is the ETF he runs. Is from Wedbush Securities, Wedbush Funds, and you guys can kind of see here some of the holdings, right? Some of the top holdings, some of his top picks. Are right here. TSM, Micron, right? We both know, or we all know, that Micron has been on an absolute rip. It looks like it's having a bit of a correction now, but of course you're going to have NVIDIA, Meta, Google. I'm surprised Apple's in there, but he's spoken pretty highly of Apple in recent time. Of course, you're going to have Broadcom, AVGO. They have a huge partnership with Google. They make or manufacture their TPUs. So big deal for Broadcom. Of course, you're going to have Amazon, Alibaba. I did see something posted in the Discord where they're actually splitting off their AI chip company. So waiting to see what's going to happen with that. I think Skeptic had posted that. I don't have it handy with me at the moment. But yeah, if you guys ever wanted to just see what some of these managers, high conviction picks are, just look at the ETFs that they're holding, and that's at least a good starting point. So you can do your own due diligence, right? If you're not interested in investing into an ETF that holds a basket of companies, you could always look at their holdings and then start your research there. We also have Tom Lee in the mix. All right. We haven't heard from our boy Tom in a little bit. He's talking about gold. All right. So let's listen in and see what he has to say.
He is FundStrat's managing partner and head of research. Welcome back.
Great to see you, Scott.
So what do you make of the price action today? This was a undoubtedly better than expected jobs report. Yields ticked up, maybe expectations of cuts by the Fed ticked down. We're trying to just figure it all out today?
Yes, I think the macro is a little confusing for investors at the moment because we not only have a new Fed chair that's announced and his policy stance isn't clear, but I think investors have been thinking AI was going to eat the jobs market. But we have a pretty decent jobs report. I think it's going to put a lot of weight, and we of course had a weak retail sales, but it's going to put a lot of weight on Friday's CPI report, because if that comes in tame, at least the market can understand that the inflation part of the Fed's equation is cooling. And of course, now if the job market is showing decent strength, it kind of relieves us from a macro perspective, because at least we're not seeing an economic downturn.
How about the fact that the market's been a little frazzled? That's the word I've been using today lately. Bespoke points it out. For the first time in history, the S&P went from overbought to oversold, back to overbought in a week or less. Goldman's Tony Pasquarello, Tom, says he can't recall a time that was this noisy, this high velocity, this wide open. What about you?
It's very confusing, Scott. I think that there's two things happening, but I think one is really the bigger effect. I think the smaller effect is that AI, as you know, has gone from being this sort of driver of S&P earnings. Now the market questioning, is AI just wrecking tech so badly that it's bad for the stock market? And also, they're not buying the data centers and hyperscalers anymore. They're actually trying to buy the bullets, not the armies. But I think the bigger effect is that gold has become like this singular monolithic trade that's worked. But gold now is a $40 trillion market. X the Mag 7, the S&P is 40 trillion. Gold is now bigger than the stock market. So I think as gold rises, I think investors are wondering, do they really want to use stocks as a store of value if they can just be buying gold?
Man, I just feel like we're kind of going down the line of the AI shooting gallery. And first you take down some of the mega caps, and then you take down a lot of software, and then you take down some of the private credit names, and then you take down some of the financial data related names. Is that just how it's going to be? We're just trying to guess on who's going to be disrupted the most?
Well, I do think AI's capabilities, Scott, are showing improvements, maybe, as they say, doubling every 7 months. And now it's going from mediocre to quite good and substituting some jobs. I think that, of course, is rattling markets. But at the end of the day, and this is a half full perspective, it's kind of proof of productivity. So to me, I think what we're seeing is that there is a payoff coming from AI, because for software companies, for the ones that are actually truly disrupted by AI, that actually is a cost savings for a client. So I think it ultimately is productivity.
Tom, when someone like David Einhorn comes on today and says, quote, "I think this is the most expensive market that we've been in," can you argue with that? I mean, you can say that it's pricey. Others would say, well, it's justified because look at how earnings are beating expectations. How do you parse that out?
Well, I mean, on a relative basis, his statement is correct because, as the late Art Cashin said, bull markets don't die of old age, they get murdered by the Fed. So every year the market does get a little more relatively expensive, even if earnings are good. But this year is pretty unique. Earnings growth is accelerating. The ISM is back above 50 after spending basically 3 years below 50. We have a new Fed that ultimately, I think the market is concluding is dovish, and David Einhorn actually believes he's dovish. So that's supportive of multiples going up at a time when the stock market has been shown 6 black swans, from all the way from COVID to the tariff disruptions, and still grew earnings. So I think the market's going to have to start to give a higher PE to the equity market, just in the same way that gold's being re-rated at the moment. Gold's PE multiple, price to sales, I think, is over 50 times right now. So if gold can re-rate, I think equities can re-rate higher.
Boom. There you go, guys. From Tom Lee, if gold can re-rate higher, then equities won't be far behind, or equities will also re-rate higher. So that's, that's in his words. I think so. I think so for sure. We're still all kind of bracing for this massive dip that's supposed to hit us at some point. We don't know when. We don't even know if we're going to get hit with, that 10% to 15% drop. Some are calling 15 to 20%. Nobody really knows how bad it's going to be. And we may not even have a dip, or maybe it comes late in the year, right? Again, everyone keeps using that this is an election year, a swing year, not a swing year, a midterm election year. So, that, could play a part in all of this. And, of course, the current administration wants an up market because that's only going to incentivize voters. So that's obviously a pretty big deal. And we still have a new Fed coming in. All right. Don't forget that. We still have a new Fed coming in. We still have a couple, let's see, I think another meeting or two before that happens. Before that, then, the hearing for the new Fed happens. And even then, the Trump administration could switch up and say that they don't even want Kevin Warsh anymore. Right. So we will see how all of this plays out this year. It's still very early in the year. It's barely February. Okay. I think we could probably throw out the S&P 500 seasonal chart. If you guys remember this, I was using this pretty much all of last year. I kept bringing it up because it was almost playing out just like this, right? This is the S&P seasonality chart, right? And even though like what happened last year happened in April, right? It still held true, kind of how it all played out, right? How the whole year played out, except towards October, we just had a shock and it never really went higher than that. So, with gold, I personally do have a position in gold. I'm holding it because, I hold it more because of the idea behind a debasement trade, right? The U.S. is going to continue printing a lot of money. If you think the United States government is going to be fiscally responsible starting tomorrow, I think a lot of people would be, sadly mistaken. I mean, the U.S. debt, again, U.S. debt is $38 trillion. Okay, $38 trillion, and it's climbing. Just this month, I think I posted an article in the Discord. Let me see if I can pull it up real quick. But just in a single month, the United States added, what was it, $800 billion in debt to the national debt. Let's see if I can find it real quick. But yeah, it's like we just cannot stop printing. And of course, we're still waiting on the OBBB to really fully play out for the rest of this year. You're going to have some tax rebates, tax cuts, etc. Oh, here it is right here. So let me pull this up. So yeah, right here. This is coming from AOL. U.S. added nearly $700 billion to the national debt in 4 months. All right, in 4 months, we're already almost up to another $1 trillion. All right, that is really, really fast. And again, we're only just adding more. The Trump administration requested an increase in defense spending. We still have quantitative easing that's potentially going to happen later this year, along with interest rate cuts. I mean, we're just going to keep on printing. And, the Trump administration wants a weaker dollar because it's going to make all the U.S. goods cheaper for foreign countries, right? And that's also going to play a big part in this trend in this year. And that's why the idea of, invest in scarcity, not abundance, right? Invest in scarcity. And what is scarce right now? From a technology standpoint, you're going to have the semiconductors even a level below that. You're going to have memory that's going to be very important because there's not enough of it to go around. You're looking a layer below that. You have power infrastructure. There's not enough to power these data centers. You look even below that, and you're going to have commodities, right? You're going to have the commodities that are also very important. This is why gold is just having a merry old time. At least that's what's going on in my mind, right? That's what I'm thinking about. Whenever I think about, this U.S. debt and how fiscally irresponsible the United States has been and why gold continues just to keep pushing higher. Even though gold and a lot of the metals, silver had a really bad correction, even though that happened, it does not change the fundamental story for these metals. Silver is still a huge industrial metal that there's not enough to go around, right? Copper is still going to be just as important. Gold, excellent store of value, right? These are why I think, again, just as an observer, as someone who just kind of entered into the commodity space, this is why I think these metals are so important and why these little pullbacks on paper gold and paper silver are not enough to, really deter, my thesis for these items. Now, do I hold actual commodity, silver, spot price silver? No, I do not. I'm more interested in the miners, the silver miners than anything. And the same thing for gold and copper as well. More so the miner ETFs. I don't do, the spot price. But that's just me personally. Anyone can do whatever they want with their money. All right. So we had some breaking news, right? That came out earlier in the day. I see we're running close to about an hour on the stream. So we're going to probably have to get through these next couple of bits really, really quickly because I don't want to take up too much of your guys' time. And I also have to get going here soon too. So here we go. This is breaking news. U.S. payrolls was actually really, really good. So again, when we're talking about the, Fed Reserve cutting interest rates, it was mostly because of the jobs market, right? The job market was starting to falter. It's starting to show cracks. It's starting to look bad. People are getting laid off left and right. There's not enough jobs for these people. But this report came in really, really good. So depending on how next month's go, right, how the next reading goes, that'll be a very good sign, or at least a good telltale sign for how the Federal Reserve is looking at all this. Because again, they wanted to lower interest rates because the labor economy was looking really, really bad. So let's take.
Hi, good morning, Kelly. Yes, it's Jobs Wednesday. Not necessarily a Friday, but every bit as important. Non-farm payrolls for January coming in twice expectations at 130,000. 130K. That would be the juiciest going back to April of last year when it was 158. Now, if we look at a couple of months worth of revision, they came in at minus 17,000. Now, let's look for average hourly earnings month over month, up 0.4. That's 1/10 higher than both Looking back and looking forward, 4/10 would equal October last year. You are all the way back to the summer of 24 to find a higher month-over-month earnings number. Let's go year over year. 3.7 exactly as expected. 1/10 light to 3.8 in the rear view mirror. So how does that stack up? 3.7 would be the lightest since it was actually 3.6 Thanksgiving of last year. Now let's look at hours worked, shall we? 34.3. That increase, that's a good thing. That's up 1/10 from both what we were expecting and our last look. 34.3 would equal November. To find a higher one, you're all the way back to March of 24. Now the unemployment rate, maybe the most important number of all, and it moves down 1/10, 4.3%. All the naysayers out there, they're going to like this set of data points. 4.3 would be equal to where we were in August of last year. To find a lower number, you're looking at June of last year. Labor force participation moved up as well. More good news, 62.5. That would be the best since it was 62.6 in April of last year. And drum roll, please, the final number I'm going to give you is U6, the underemployment rate, and it comes in at 8%. 8%. Last look was 8.4. 8% would be the best going all the way back to July when it was 7.9. Now, for the bad news, but expected bad news, we're looking at benchmark revisions from April of 24 to March of 25. The original number that we were looking at was around minus 900,000, comes in at minus 862,000. So the benchmark revisions are a little less than expected, but some were actually thinking it'll be in the 700,000 camp. So that comes into minus 862. What are yields doing? Zoom, zoom, zoom is what yields are doing. We moved from 12, which was down 3 on a 10-year, to 4.19. That makes sense. A 2-year really screaming from 3.45 all the way up to 3.53. Why? Because these are solid, solid data points. And one more thing I'd like to point out, I am really on this kick. I think seasonal adjustments are dead on arrival on most numbers. Yesterday's retail sales looked flat. I brought it out at 8:30. But if you look at non-seasonally adjusted, it was the strongest December on record at $818 billion. Kelly, Sully.
This dude is so animated. All right. So again, jobs report was good. And then, retail spending was good also in December. So we covered, how debt is actually, from like credit card debt was expanding in the last stream, right? I don't have the clip, but there was someone on CNBC. I'm trying to remember his name, but he had also mentioned, according to JP Morgan, it was JP Morgan. JP Morgan was mentioning that they are not seeing a spike in delinquencies. So even though there's credit card debt rising, they're not seeing a spike in delinquencies, meaning people are not paying their credit card debts, right? But the debt is still climbing, right? Which again, it's just a mixed signal. I don't even know what to make of that. People are spending money, which is why retail, sales were so good in December. People are spending money. I guess we got to just wait and see how this all plays out the rest of this year. Because again, people are still getting laid off. You had Amazon cutting a ton of jobs, 100,000 plus jobs or something. You have UPS laying off people. You have a lot of these seasonality jobs cutting people. So yeah, let's see. All right. I'm going to skip. Let's see. What is this? That's nothing. Bill Ackman takes a stake in Meta, or reveals a stake in Meta, deeply discounted valuation model. We'll just cover this real quick, and then we're going to get to kind of the ETF check. We'll check out the ETF Pax G because it's an international ETF, and we did talk with the working investor about international and why it's so attractive right now, especially since the dollar is getting super cheap, right? So that could make sense, for something like international exposure. I'm not saying just because of the dollar getting cheaper. That's just a point. That's just a point, right? But anyways, Bill Ackman reveals a stake in Meta, says it has deeply discounted valuation. Bill Ackman's Pershing Square Capital Management revealed a new stake in Meta during the fund's annual investor presentation. The stake amounts to 10% of Pershing's capital. That's a pretty big position. All right. As of the end of 2025, it's the third addition to Pershing's portfolio of 2025 with previously disclosed positions in Amazon and Hertz. That is just wild. I'm not going to go through this whole thing because it'll probably take a little long. But again, if you're an investor in Meta, maybe this is a sign, right? Maybe this is a signal that, if you're having the big dogs taking a stake in Meta, that this stock is already probably pumped or going to continue pumping. I still don't see the appeal of Meta. Me personally, I just don't see it. They tried the metaverse, it blew up in their face. Now the next big thing for Meta, the Ray-Ban glasses with augmented VR and all that stuff. I mean, I guess so, maybe. You could record with the Meta bands or the Meta Ray-Bans, I suppose. They're coming out with AI for ads, for ad revenue, and ads make up a good portion of Meta's revenue, right? Probably the biggest portion of all. They've been experimenting. They went on this huge acquisition spree, all of last year, just getting more and more people, acquiring all the best talent. They spent a lot of money. They're actually raising money right now through the bond market for, AI CapEx spend, so again, data centers, that type of stuff. But again, for me personally, I just don't see the appeal of Meta. Like, yes, they own WhatsApp, they own Instagram, they own Facebook. I mean, I'm getting sick of two of those apps out of the three, right? They have, what was it? Yeah. I don't know. I'm just getting kind of tired of it. They have Threads, and Threads was, in my opinion, a colossal failure. There's more bots than there are actual people using Threads. They're trying to compete with X. X is just a better platform. All in all, Threads is just Instagram without reels, right? Without pictures. Like, I don't know. I didn't like Threads at all. I don't even really use it. WhatsApp is probably the only thing I use out of Meta, and they already started integrating ads for Meta or for WhatsApp. Like, that's the big thing with Meta. I just don't see what the appeal of Meta is. Obviously, I haven't done enough due diligence in it to have any type of a conviction. Is it a good company? I'm sure it is. I mean, they're flush with cash. They just have a ton of cash, and they're looking for ways to, get into the AI race. I just, again, personally don't see the appeal. So we have from Sergio, I'm with you. I don't get the entire hype about Meta. I like the Meta glasses. I do too. Like, I want to get some Ray-Bans, some Meta Ray-Bans. But I don't really go out a whole lot, so, I mean, unless I walk around, I guess the house or whatever, there's really not a whole lot that I personally do. So it'd kind of be a waste for me. Let's see. I see your comment, Super Straight Guy. I'm not going to post it, but I see your comment. Can AI go to work for me, but I still get a paycheck? Actually, yes, it can. There are people who are using, AI to basically do their jobs for them, especially in the coding space, right? You remember that story? There was a guy who he outsourced his job to somebody in China. They were basically, or it was India. They were basically doing all of his coding for him, right? And he just kept submitting, the work to them. And then he was working at this software company, didn't understand anything about coding, but he just outsourced his job. And he did this for years. Like, he did this for a couple of years until he was caught. But that is crazy that he was able to do that. Okay, I'm going to skip the Cisco thing. All right, Cisco stock dropped 7%, mediocre forecast. There is some news coming out from Cisco, but again, you guys can read that article. We are running kind of short on time here. I'm not going to cover this. Let's see. Hong Kong proceeds with stable coins. All right. I think that is, again, a big deal. The reason being is because it's not a big deal for like Bitcoin or anything, but it's the stable coin adoption, right? You have a country, China, that is very anti-cryptocurrency. And we did talk about this, Scott Bessent was at a hearing, and they were asking him, is there any truth to China moving onto stable coins, right? And he said, no, there's no credible intelligence. And then we have this come out, right? Hong Kong proceeds with stable coin plans. But again, don't get Hong Kong and Beijing twisted. Hong Kong is, supposedly its own city. It was, owned by the British for some time. The British gave it back to China. And then China basically tried to, clamp down on Hong Kong, right? But it's supposed to be a 2-country, 1-party system. Not really the case as much as people would like to think. China just went into Hong Kong and basically, did their thing, right? But yes, Beijing still has reservations, right? Beijing is capital China, and they have reservations about cryptocurrency. So this, is true from what Scott Besson was saying, that they don't have any credible intelligence, but it looks like Hong Kong, which is the financial hub over there, is moving forward with stablecoin adoption, right? Or at least they're trying to. So basically, the net of this is they're going to issue out licenses to either banks, institutions, so that they can start creating their stable coins, right? So this is again, it's really, really cool to see that this is actually happening, especially for the crypto space, and that a country that is very anti crypto anything, because they can't control it, right? They want control over cryptocurrencies. It's just it's a government thing. They want total control over that. But Hong Kong is moving forward with that. So again, I thought that was really, really cool. Speaking of David Einhorn, I couldn't find the clip. I was really looking forward to it. I couldn't find the clip, unfortunately, but he did say that the Fed will cut interest rates a whole bunch of times, substantially more than 2. And, I've heard other analysts say that, they're shooting for about 3 rate cuts this year after Powell leaves, which would be absolutely insane to cut 3 times, right? They're trying to get it to basically near 0. There's a clip of Donald Trump basically explaining that, GDP growth could grow up to 15%, which would be absolutely insane, which would be totally, totally insane, that the United States would even reach something like that. But, that's the whole focus of this administration, is putting the people in the right place so they could get the rates down, right? Get rates cut, and so they can refinance all of the debt that they owe. The United States owes, again, a beautiful 38 trillion, well on its way to $39 trillion. All right. Last bit of news, especially for you metalheads: lithium price is gaining, set to continue as demand outlook remains promising, according to an analyst. All right. While lithium prices still remain far below all-time highs reached in 2023, they have climbed in recent months and should continue to do so, fueled by supply disruptions in China and solid demand, Commonwealth Bank of Australia analyst Vivek Dhar said Wednesday in a note. All right, so for anyone who's looking at the metals commodity space, or looking at that story, again, lithium, copper, platinum, palladium, silver, gold, these are the metals to look at. You could throw in nickel. Of course, there's 100 other metals out there that you can look into as well. But I'm just naming the ones that I'm looking at. All right. So that is that there. Okay. So let's look at this ETF that was dropped into the chat, and then we'll look at the rankings. All right. We'll look at the rankings for the community. Okay. So we have Paxos here. So this is Pax G, the safest way to own investment grade gold. Okay, what is this? A digital token backed by physical gold. Is this a cryptocurrency? Okay. All right. So it is. All right. So Pax G offers investors a cost-effective way to own investment-grade physical gold with all the benefits of the blockchain. Each Pax Gold token is backed by 1 fine troy ounce of gold stored in LBMA vaults in London. So if you own Pax G, you own the underlying physical gold held in custody. So it's redeemable, no settlement risk, secure and regulated, cost efficient. I'm going to have to look into this one. I'm always weary of these crypto, gold things. Like, I know Tether, but Tether is extremely reputable. I've never heard of Paxos. It looks like they have a couple of tokens here. They have the global dollar, which is pegged to the USD. They have the Pax dollar, which is fully backed by the US dollar. See, and then they have Pax Gold, which is backed by 1 fine troy ounce of gold. And then PYUSD, PayPal USD. Hey, look at that. And this is PayPal's stable coin. Okay, so this adds a little more credibility in my opinion. I thought this was just another, I hate to say it this way, but another shit coin, you know, alt company that's just pumping out these coins that are just getting rug pulled left and right. But this adds a little more, credibility to it. So I'll actually look at this. Yeah, when your crypto follows gold, is it still DeFi? Just invest in gold, bro. That's it. Just buy gold. All right. Well, for anyone who's into gold and crypto, well, here it is, right? Here's something you can consider. Pax G. So not something I'd personally get into because I just don't want to own any coins outside of Bitcoin, Ethereum. And even then, I don't even own the actual coins themselves. I have the ETFs, the ETF versions, or you know, something like a BMNR, which is a proxy. But again, that's just my style. So let's look at the rankings real quick, and then we'll call it on the stream. So I actually have to pull it up. Let's see. Oh, there we go. Hope you guys can see that. All right. So I am down a total return of 10.72%. All right. We have, let's see, pay me and dividends down 7, almost 8%. We have the Victor Crooks up 2.5%. Okay. Alex is up down 1.52. We have Serial Beggar. I misspelled his name again. Serial Beggar. He's actually up 54 basis points. All right. And then Bank Shop Bobo down 3.85%. And Dividend Rocket down 1.78%. And then Super Straight Guy down 5.39%. Citizen of the Year with his all in on Micron. He is down. He's down, what was it, 1.09%? But he was down much. He was down much more. But it looks like he had a really nice bounce up. Is that a 10%? Yeah, that's a 10% gain on Micron. Damn. Yep, there we go. All in on Micron. So here you guys can see. So yeah, for me, I'm getting cooked because again, I'm in some really, really high beta names that are not being loved by the market. Obviously, MSTR, BMNR for me. You know, I also have crypto exposure for Bitcoin. Looks like the miners that I chose are not doing so hot either. Palantir's obviously been having a pretty decent sell-off. Let's see, we have Neocore. Again, Neocore is not doing so hot either. ONS, which is a moonshot for me, is actually down quite a bit as well. And then CoreWeave. Let's see what else. So we'll look at Victor because I know he wants to look at his. So his postings are actually doing pretty well. His bullshit penny stocks. No, but his picks are doing well. So for anyone looking for, again, stuff in the metal space, these are some of the tickers that he's been interested in. So definitely something to look into. Let's see what else we have. Who's a really good one to look at? You know what? We'll just we'll go down. We'll go down the list. Theta Decay almost down 5%. UPS, UNH, looks like they're up. SMCI. Not my personal pick, you know. Yeah, I'm so like bearish on SMCI, but again, you know, they have a big part to play in data center capex. Let's see, NVIDIA, of course, MSTR. Yep. So yeah, some of these names are kind of in everyone's portfolios. Yeah, ASTS is the other one I was talking about. AST Space Mobile. So you know, they're doing satellites in space, you know, for communications. Yeah, Rocket Lab. That is, you know, one of the hype names. Basically, in my opinion, is basically a meme stock. But yes, it did really, really well in 2025. There's a whole community for Rocket Lab. JP Morgan Financials. Yeah, we have Meta in here, Netflix. So not too bad. All right. Again, we closed this challenge on the 31st of January. All right. So we can kind of see where everyone is sitting at. It looks like, again, my portfolio being down the most, and I'm perfectly fine with that because I know that, or at least I'm bullish on Bitcoin, you know, really coming back. And I'm still bullish on Palantir and NVIDIA, of course. I don't think I put NVIDIA in here there. or in here. No, I went with CoreWeave instead because I wanted data center exposure. And CoreWeave, as some of you guys might know, is a pure play data center or AI data center play. They have backing from NVIDIA, from OpenAI. They have deals with Microsoft. But that's also the problem. That's also the problem with CoreWeave, is that they have such a concentration of basically customers. They only have like a few customers that are paying everything. One of the biggest bear cases against CoreWeave is that they spend too much on their hardware, which I mean, I say this all the time, but when you look at data center REITs like Equinix or Digital Realty Trust, ticker DLR, EQIX respectively, if you're looking at these, they're always going to be CapEx heavy because they have to own the server hardware, right? The trick is when the server hardware starts to depreciate over time, right? NVIDIA comes out a new chip, right? Or new hardware, or AMD comes out with new hardware, right? What happens to the old hardware? Typically, they have to depreciate that, but how much they depreciate that has also come up, right? That also plays into their bottom line, revenues and everything else, right? So that is the rankings. So for right now, as of February 12th, we have the Victor Crooks leading the pack. All right. And then we have in second place, we have Serial Bagger, which is funny as hell that he just made up a bunch of tickers and then basically going after his name. And then we have Dividend Rocket. Actually, we have Citizen of the Year coming in third, right? So everyone else. So that's the leaderboard. All right. That's the leaderboard for right now. So that is it. Okay. Serious ETF, DMAT. Reveal. Let's see. Relevant to what you were saying about metals. Yeah, we covered DMAT before. DMAT was from Global X, if I remember. Yeah, Global X Disruptive Materials. Yeah, we covered this one before. Yeah, so if anyone's interested again in another ETF that's skewed to metals or commodities, you guys can look at Disruptive Materials. Check out their holdings, of course. You can also look at SprotETFs.com, if I'm not mistaken. That's their website. They also have a bunch of niche ETFs for the commodity space. So it takes a lot of the guesswork out. But yeah, we've covered this before. All right, guys. Well, I think that's going to do it for me. I appreciate you guys joining me for this stream. All right. Appreciate you guys taking some time out of your busy day to get, and I hope I provided just a little bit of value, maybe a little bit of entertainment. But with that being said, I will see you guys in the next stream. You guys have a wonderful day, wonderful evening, wherever you're in the world. All right. Take care.